Hi, Jonathan York, Bay Financial Partners, looking at investment markets. The latest data out of the US was really pretty encouraging and showed a pretty robust, strong economy. The latest employment data came in at 227,000 for the month. That was versus expectations of 214,000, so just slightly better. What was encouraging though was the upward revisions to the two previous months by around 86,000. And more importantly, the October number was revised up from 12,000 to 36,000. With hourly earnings still appear to be under control, it's all sort of encouraging for the Fed meeting later this month for potentially a further 25 basis point cut. The rates have nudged up just slightly. The 10 years back at 4.23, the 2 years back at 4.16. So will the Fed cut rates again by 25 basis points at its December meeting? And then going forward, how will Trump and Jay Powell sort of interact for the good of the US economy? Because potentially what Jay Powell and the Fed does may not be what Trump wants. But certainly US equities have had a pretty good year. The S&P has had its third best year since 1990 and its best year since 1997. But obviously many of those gains have still been driven by the heavy tech stocks. Although we have started to see in the last sort of couple of months a sort of expansion into the broader economy. But what will the Trump administration bring for the economy in 2025? Because certainly tariffs will be inflationary, and also the mass deportation as well will hurt the US economy. Certainly undocumented workers make up a big part of construction in the US. And Trump still has to get his cabinet picks through as well. And that's going to be pretty interesting as well because, he's had a couple of sort of dropouts. But in usual sort of Trump style, he's come out and said, well, actually, they didn't pull out. I sort of withdrew them because they weren't suitable candidates. Well, in the case of Chad Corister for the DEA, Trump sort of nominates him and sort of praises him, say what a great candidate is, sort of well qualified and everything. And then 3 days later, Chad withdraws his nomination. But in typical Trump style, Trump comes out and says, no, he didn't withdraw. I withdrew him because he wasn't qualified for the job. Now, obviously, the big news is the fall of the Assad government in Syria. That was certainly pretty quick and pretty rapid. And, no surprise, he sort of fled to Russia to seek political asylum. And Putin has grounded him that because he was his main backer. But again, it's pretty embarrassing and humiliating for Putin. But now potentially we're left with a little bit of a void, and certainly the leader of the rebel forces, in many countries is considered a terrorist organization. So after years of sort of war in Syria, it would just be very interesting to see how it plays out over the next sort of 3 to 6 months. Meanwhile, obviously, you've still got the Russian-Ukraine war, which is, in February will be entering its 4th year. Plus, we've still got the conflict, Israel, Lebanon, and Gaza. Now, oil really hasn't sort of spiked at all on the sort of Syrian issue. It's still currently around 68.80 and change. Yeah, Bank of England Governor Bailey has come out and said that with inflation falling in the UK economy, potentially we're looking at 4 further rate cuts in 2025. Which will certainly be welcome news because the UK economy certainly needs it. Now, in the EU region, obviously the vote of no confidence in the French government was pretty damaging for French politics and does leave a little bit of a sort of void out there and a vacuum that needs to be filled. So will that be enough to upset the ECB and potentially deter them from cutting rates just before Christmas? Now in Australia, anemic growth for the third quarter came in at plus 0.3, but it was sort of positive just. And while the Reserve Bank did leave rates unchanged, there was no surprise. It looks like they're getting a little bit more comfortable with the inflation falling, and potentially that paves the way for rate cuts in 2025. Now here in New Zealand, the Reserve Bank doesn't meet again until the 19th of February 2025, when they're widely expected to cut interest rates by a further 50 basis points. Because certainly inflation is falling, but the economy is still very sluggish and really going to be hoping for one, good weather over the summer months, then obviously tourists coming in and spending money in the economy. Because while the dairy sector has obviously got some good news with those increased payouts, certainly retail is still pretty sluggish out there. Although there were some encouraging signs from sort of Black Friday sales and Cyber Monday sales. So I'd just like to wish everyone a very Merry Christmas from Bay Financial Partners, and we look forward to speaking to you in 2025.